Your commercial property farm policy does not cover your growing crops. Consequently, farmers wishing to insure their commodities must purchase crop insurance. Federal Multi-Peril Crop Insurance Program (MPCI) is developed, managed, and reinsured by the USDA Risk Management Agency, who in turn contracts with approved private insurers to issue policies, adjust claims, and pay losses to the grower. There are no differences in coverage or premium between carriers, making it easier for you. Under MPCI, there are several fruit crops which can be insured for revenue losses rather than yield alone. In the West, those include many specialty crops such as cherries, navel oranges, strawberries. The actual revenue history (ARH) policy helps growers if they suffer crop revenue losses due to damage from natural causes such as drought, rains, hail, frost, insects, wildlife, or poor market prices. Farmers who wish to buy a policy must do so before the sales closing date for each crop. ARH crop revenue policies are based on the grower's actual past revenue history. A grower can select coverage levels beginning at 50% and up to 75% of their historical average revenue. Here's an example. Kathy and Robert farm 10 acres of fresh cherries. With the help of their crop insurance professional Dominic, they decide to insure 75% of the orchard's past revenue history. The average past value of the crop was $10,000 per acre. Kathy's orchard suffers a crop loss due to untimely rains just before the harvest. She notifies her agent within 72 hours of the event happening. The carrier sends their adjuster to inspect the damage. The crop is unmarketable with no salvage value and deemed a total loss. Their historical actual revenue was $10,000 per acre. At 75% coverage, that's a guarantee of $7,500 per acre. The insured value of $7,500 per acre multiplied by 10 acres equals a total payable loss of $75,000. This helps them to cover the fixed cost invested in the crop and keeping their family farm going. Because federal crop insurance is partially subsidized and backed by the USDA, rates are affordable. The farmer pays a portion of the premium, the government pays the rest. Your first and most important decision is to work with a specialist in this type of insurance coverage. Someone who not only understands the program, but also the risk you face in bringing your crop to completion. At Golden Pacific Crop Insurance, our agents have nearly 2 decades of experience in crop insurance and still farm our own crops as well. We fully know what you face out there with ever-increasing regulations, water and food safety issues. Give us a call and learn how we can make this very important risk management tool something that can be easy to use and much more affordable than you may think. Call us at 559-825-CROP, that's 2767, or by email at dfino@goldenpacificcrop.com.